You're watching Dukascopy TV. I'm Elaine Stenson. The China Markit HSBC PMI fell to an 8-month low of 48 in March. The index has been below the 50 level since January, indicating a contraction this year. Michal Meidan, China analyst and consultant based in Paris, joins me now. Michal, how do you respond to these figures?
I mean, it's clear that the Chinese economy is slowing down, but I would say that markets are they were overly pessimistic about the prospects of a hard landing maybe a month ago, and I would argue that they're now overly optimistic about the extent of the stimulus. There's no doubt that the government, if this data persists over the next month or two, is likely to gradually step up measures to support the economy, but there is unlikely to be a full-blown stimulus like the ones we saw in the aftermath of the global financial crisis.
Is it too early for some government policy measures, or should they intervene before this develops further?
And they have already been signalling that they are likely to intervene sooner rather than later, but in much more discreet ways than perhaps we would expect them to. There's unlikely to be an announcement of a full-blown stimulus. It's more likely to be discrete projects that will now get expedited approvals, and there are even political signals. I think that the whole sort of Chinese system more broadly, be it provincial governments or industrial actors, were waiting for the National People's Congress, the parliamentary session in March, to sort of see where the wind was blowing. The fact that the government introduced a GDP growth target for this year at 7.5%, I think was a signal to them that they can approve new projects, that growth is on the table, just not excessive growth. So we're likely to see spending on infrastructure, rail, grid, and it is no coincidence that the urbanization plan through 2020 was issued 2 weeks ago.
Ideas that have been suggested include lowering entry barriers for private investment, targeted spending on subways, air cleaning and public housing, or guiding lending rates lower. Are any of these ideas feasible, and would they work?
I think most of them are feasible. They're likely. They are also likely to work, especially again as it's going to be in a very measured way. In terms of foreign investment, all the efforts to support growth will align with the government's broader reform and rebalancing agenda. And that means urbanization, but a more sustainable form of urbanization. So it's investments in social welfare, which means public housing. And the government has announced at the National People's Congress a target to start 7 million units of affordable housing this year. Subway systems, but especially environmental and energy-related issues, energy efficiency, anti-pollution efforts, and IT systems that will also accompany the new urbanization push. In terms of openings to foreign investors, to private sector and to foreign investors, that's again a thing that is highly likely to be on the agenda. We've already heard some of the big state-owned energy companies announcing partial privatization and greater openings for private and potentially foreign capital into their marketing and distribution segments. We're likely to see it in the grid, in the electric grid. And perhaps the biggest thing to watch out for is the Shanghai Free Trade Zone that will announce additional rules and additional sectors in which it will welcome investments in the coming months.
Michal, finally, what are you expecting from China's PMI for the rest of the year?
I mean, if you look at the politics behind the reform agenda, it suggests slower growth. It should suggest a much more modest tack than we've seen in the past. And so I don't think markets should be expecting, great news from China. But it's certainly likely to remain stable because that is the political mandate. It is to move ahead with reform, but to sustain growth and, most importantly, employment. So I guess the next piece of data to watch for will be the registered unemployment that will come out at the end of the quarter.
Okay, Michal, as always, thank you for joining us today. And that's all from me for now, but do check back for further updates and interviews from the TV team. Bye for now.